Hello dear students, welcome to Devika's Commerce and Management Academy. Holding companies, you got an understanding. Basic problems, maximum we have done. Now today we'll focus on intercompany transactions. Intercompany transactions means holding company to subsidiary company or subsidiary company to holding company, any transactions are there. Always remember, very easy to handle this problem. Whenever you find any intercompany transactions, you have to delete it related to that transaction. Intercompany transactions we don't entertain, we don't consider into the consolidated balance sheet. Only this point you remember. This is the new point of this problem. Intercompany transaction. Rest of everything is normal. Okay. Problem is given on the desktop. You can take a screenshot or note down. Okay, first I'll read the problem, then after that we'll go for the solution. Prepare consolidated balance sheet from the following. What is given on the liability side? Share capital, shares of 10 rupees each, 5 lakh and 3 lakh, Bharat Limited, Chandra Limited, okay? And creditors and bills payable. Both will come under the trade payable, creditors and bills payable. Now, coming to the asset side, we have liabilities are only three transactions: share capital, creditors and bills payable. Okay, now coming to asset side, land and building, this is fixed assets. Okay, intangible, tangible, intangible assets will write now. This is tangible asset, land and building. Investments by the Bharat Limited. Bharat Limited is investing on Chandra Limited. How much they are investing? Investment in Chandra Limited, 60% of shares only, not all. If they are having 3 lakhs, it's given on the liabilities at share capital. Chandra Limited is share capital is 3 lakh. Out of 3 lakh, Bharat Limited is investing 60% only. Okay. So how much they are paying? 1,80,000. 60% they are investing. Means what about the 40%? 40% is outsiders. It means minority interest is there. They never mention it. We must understand that 60% is by the holding company, means rest of the 40% is outsiders. Outsiders are who are nothing but the minority interest. Okay. Now, next, debtors, bills receivable. Both will come under the trade receivable on the asset side. Cash in hand, this also comes under the asset side. Cash and cash equivalents column. Same company accounts. Company accounts, whatever format we used to follow, same format we are going to follow. Now problem is very simple. Now coming to the adjustments, just be careful. First adjustment, additional information is amount of 20,000 is included in debtors of Bharat Limited. Bharat Limited is holding company. 20,000 included in debtors of Bharat Limited, which is due from Chandra Limited. Chandra Limited is supposed to receive, but it is included in the Bharat Limited. So when this is called as intercompany transaction, where Bharat Limited, Bharat Limited, Chandra Limited, both the companies are involved, holding company and subsidiary company. This is intercompany transaction. Intercompany transactions we are not supposed to take. What we do, the same amount 20,000 will deduct it from the debtors and also from the creditors. From debtors and creditors, both the sides we are going to deduct it, because we don't want intercompany transactions. In the same fashion, second bit, are bills possessed by Chandra Limited, bills worth of 15,000 are bills accepted by Bharat Limited. The bill which is related to Chandra Limited are accepted by Bharat Limited. This is also intercompany transaction. So we don't want intercompany transactions. Whenever you find both holding and subsidiary company, whether it's debtors, creditors or bills receivable, bills payable, anything is mentioned, it is the intercompany transactions. Earlier what we have done for the first bit, deducted from the debtors and creditors. Now here second one is related to bills receivable and bills payable. This is also to be deducted because we don't want intercompany transactions. So deduct from the bills receivable, deduct from the bills payable. This is the new point. If you understand, the rest of the problem is normal. Am I clear? Shall we go to the problem? Yes. Already I have done few homework, that is working notes already I have completed. Now we'll work out the problem. Let me explain the working notes first. In the problem, first they said that investment by Chandra Limited is 60% shares. 60% is invested by the holding company. Rest of the 40% is outsiders. Outsiders means minority interest. The same point we are mentioning in the working notes. Working notes is different. Notes is different. Notes means the accompanied information related to the consolidated balance sheet. Okay. Now here B Limited shares are 60% means Bharat Limited. Bharat means that is nothing but holding company. Holding company shares are 60%. It means rest of the 40% is minority interest. Outsiders 40%. This we have written in the working notes. Then next after that minority interest calculation we have done. How do we do minority interest calculation? You know that total paid up share capital of Chandra Limited is 3 lakh. Okay, 3 lakh. Out of this, 60% is by the holding company. 40% is minority interest. So 40% only we have calculated. 60% is B Limited is purchasing. Rest of the 40% out of 3 lakh. So this is 1,20,000 is the minority interest. What do we do minority interest? We'll write it in the balance sheet, consolidated balance sheet under the share capital column. Under the shares, paid up shares, share capital, reserves and surplus, minority interest. 3 items you are going to find. Okay. So this is minority interest. Now next point is calculation of goodwill or reserve. You may get goodwill or capital reserve, whatever it may. So we kept a heading calculation of goodwill or capital reserve. Now here first we are taking investment. Investment, how much is the investment by the Bharat Limited? It is given on the asset side. Investment is 1,80,000. 1,80,000 is the investment by the Bharat Limited. And what is the value they are supposed to pay? 60% they wanted to pay. 60%. 60% if you calculate paid up value of shares. So how much they are paying? 60% of 3 lakh. 3 lakh is given on the liability side. Out of 3 lakh, 60% if you calculate, that is the exact amount, exact value of the shares of the Chandra Limited. Chandra Limited company's value of shares are here 60% of 3 lakh. 60% of 3 lakh comes to 1,80,000 only. It means exactly we are paying worth of the shares is 1,80,000. How much we are paying given in the balance sheet? That is also 1,80,000. Both are equal. So there is no goodwill, no capital reserve. So it is nil. We have done our calculations. We are not getting anything. So nil it is. So this is about the working notes. Now coming to the balance sheet, consolidated balance sheet. Consolidated balance sheet, always remember we have to draw the format as it is. You know that equity and liabilities we keep the heading. Under equity and liabilities 3 columns are there. One is shareholders funds, non-current liabilities means long term, and current liabilities. Shareholders funds we have 3 items: share capital, reserves and surplus, minority interest. Now on the asset side, non-current assets, current assets. Non-current assets means tangible assets, that is fixed assets. Intangible assets. Intangible assets means goodwill. Now current assets. Current assets, inventories, trade receivable. Trade receivables means debtors and bills receivable. Here trade payable means creditors and bills payable. Cash and cash equivalents, other current assets. A blank consolidated balance sheet we have prepared. Now according to that, whatever is required we can do it. Now first one is here. First we can write liability side. Liability side, share capital. Share capital we are writing. Share capital is note number 1. Already I have written here. Share capital. What is the share capital value? 5 lakh. Which companies will take? Holding company, not subsidiary. Subsidiary already purchased by the holding company. So we take the holding company, 5 lakh only. So this we have mentioned very clearly that each share is 10 rupees. Means how many shares are there? 5 lakh share, total amount. Each share is 10 rupees. Means 50,000 shares are there. That is what we have mentioned. 50,000 shares at the rate of 10 rupees each. Altogether we have 5 lakh rupees. This is note number 1. So we are writing share capital. Note number 1. How much is there? 5 lakh will write. Next, reserves and surplus. Do we have reserves and surplus on the balance sheet liability side? Not given. So it is nil. I didn't write anything. Next, minority interest. Just now we have calculated. Anyhow, in the notes also we are showing minority interest calculation we have done. It is 1,20,000. Okay, minority interest is 1,20,000. Now, minority interest is over. Non-current liabilities, we don't have anything. Next, current liabilities. Now, please be careful. Current liabilities related, we have intercompany transaction. Current liability, what do we have? Trade payable. Trade payable means always remember creditors and bills payable. Okay, so that we are showing here. Trade payable. Trade payable means creditors, bills payable. Will combined always current liabilities. Now creditors, how much it is? 2 lakh and 1 lakh. So 2 lakh and 1 lakh, which is coming to 3 lakh. First intercompany transaction, number one additional information. We have 20,000 which is related to the debtors and creditors. That is to be deducted. 20,000 we have deducted. So 3 lakh minus 20,000 comes to 2 lakh 80,000 on the outer column. This is about the creditors. In the same way, bills payable also. Bills payable is here 30,000 and 25,000. 30,000, 25,000. Bills payable related, bills payable and bills receivable related second additional information is mentioned. How much is the amount? 15,000. 15,000 is to be deducted from the bills receivable, bills payable. Right now we are talking about bills payable. 15,000 deducted. What we are writing? Intercompany debt. From one company to another company, it is a debt. So for both the sides, we are writing the same thing, intercompany debt, or you can write intercompany transaction. Both we are deducting. Okay, 55,000 minus 15,000 comes to 40,000. So altogether, total creditors are 2 lakh 80 and total bills payable is 40. Altogether 3 lakh 20,000. 3 lakh 20,000 is the trade payable. Trade payable means creditors, bills payable. Creditors 2 lakh 80, bills payable 40,000. 3 lakh 20 is the trade payable. Where is trade payable? Here. 3 lakh 20,000. So if we total up, we'll be getting 9 lakh 40,000. Liability side is over. Now let's focus on the asset side. Asset side, what do we have? First, if you see the format, first tangible assets. Tangible assets means nothing but fixed assets. Fixed assets are here, land and building. We can show it in the note number 4. Here, for 4 lakh and 2 lakh. 4 lakh, 2 lakh comes to 6 lakh. So 6 lakh we are writing here. Intangible asset, goodwill is not there, so nil. Now let's focus on the current assets. Current assets, inventories. Inventories means closing stock. That is also not given, so I kept a nil. Next, trade receivable. Trade receivable means always debtors, bills receivable. Both are given. As we have done trade payable, in the same way trade receivable we have to prepare. Trade receivable. First, let's focus on the debtors. Debtors are how much? 1 lakh and 1 lakh 50,000. So 1 lakh and 1 lakh 50,000, which is coming to 2 lakh 50,000. In the additional information, first bit 20,000 is related to the debtors and creditors. Both should be deducted. So from creditors we have deducted, and also from debtors we are deducting 20,000. Both the sides we are deducting. So we are getting 2 lakh 30,000. This is about the debtors. Now let's focus on the bills receivable. Bills receivable 40,000 and 60,000. 40,000, 60,000. There is additional information, second point. Bills receivable related, how much is the amount? 15,000. Intercompany transaction should be deducted from the bills payable, bills receivable. Bills payable we have deducted. Now from bills receivable also 15,000 we are deducting. So you are getting 1 lakh minus 15,000, 85,000. This total is 3,15,000. 3,15,000 is what? Trade receivable. That was trade payable. Now trade receivable 3,15,000. Point number 5. So 5. 3,15,000. Next, after that, cash in hand. Cash in hand means we'll show it as a cash and cash equivalents. So we kept a heading cash and cash equivalents. Both are 10,000 and 15,000, which comes to 25,000. 25,000 we'll write here. If we total up this is also, we are getting 9,40,000. Very simple problem. This problem is, in fact, it's a base problem. Only the thing is, in this problem, we got the intercompany transaction. How do we handle the intercompany transaction? Remember only one point. Intercompany transactions are not to be recorded in while preparing this comparative balance sheet. So that is the reason we have deducted intercompany related transaction, additional information, first one, which is related to the debtors and creditors, deducted from the debtors and creditors. Additional information, second, point number 2. That's about the bills receivable and bills payable. This is also intercompany transaction. Both sides, bills receivable, bills payable, both the sides we have deducted. Simple. If you remember this point, rest of the problem is very simple. Intercompany transactions, you got it. Want to take screenshot? Yes. Some students are giving a complaint, madam, for screenshot you are giving very less time. Is this okay? So this is the important problem. Next class, we will work out one more important problem. With that, we'll wind up this holding company chapter. By the way, did you check out the playlists of our channel? Many subjects already covered. Whenever you take any one chapter, please get into that chapter in depth. If I am preparing 5 or 6 lectures, videos, that's not sufficient. Basic information you got it. You have to practice more. Take out your test book, a referral guidance by your course or somebody. So you have to practice more time so that you get the full confidence on the subject. Stay connected. Don't forget to share this video. Practice well. Good luck.